Welcome back. Half an hour to go for markets to close, and we've maintained those gains above the mark of 11,200 is where Nifty is currently trading at 11,215. Bank Nifty is up about 90 points in trade. India VIX has also cooled off, and the broader markets have been just about mixed. Small cap index is up 0.5%, and mid cap is not doing too much. In fact, pull up the market breadth. That gives you a better picture of the entire listed universe. For majority of the session, it was in favor of the declines, and that continues to be the case. Remember, the move can be on account of the options expiry date today that you've seen off about 50 to 60 points. However, from the high point of the day, we've come off nearly 15 to 20 points. Pull up the turnover and check how the participation has been looking like as of now. F&O turnover is higher on account of expiry, and cash turnover has also picked up by about 6,000 crore from the time that we started the show. It's about close to 26,000 crore. Sector specific, what's doing well, metals is up. In fact, Nifty Media Index is up close to 2%, and the gains today has been led owing to recovery that one is seen for something like Z Entertainment. And besides that, you've got individual stocks like pull up RBL Bank, that's fallen in trade. It's down almost 3.5%, and Siemens was the other one which we highlighted for you. That stocks is witnessing some bit of gains. But among the Nifty gainers now, Ultratech is seeing some bit of strength. That stock's up about 3.5%, and Tata Motors has bounced back. Whereas on the losing side, Yes Bank continues to reel under pressure. That stock's down another 5% in today's session, touching fresh 52-week low, trading around that mark of nearly 136 rupees, pardon me. But whole host of other stocks to keep an eye on, and let's check which are the Fab 4 stocks that feature today in Yash Upadhyay's list. Let's go across to him then. Hi Yash, good afternoon.
Good afternoon, Navneet. I'll start first with the Tata Group stocks, and they are in focus today. Tata Global Beverages, for one, had gained more than 10% in today's day of trade after announcing the mega deal yesterday post-market hours, wherein they would be acquiring Tata Chemicals' branded consumer products business in an all-stock transaction, valuing the company at about 5,800 crore rupees. The stock is up 10%, along with Tata Chemicals too, higher by about 7.5% to 8% at this point in time. Chambal Fertilizers came out with extremely good set of numbers. Their revenues are more than doubled to 2,600 crore rupees. Net profit is up 86% on a year-on-year basis, as well as margins coming in at 16% versus 7% in the same quarter last year. So all in all, extremely good set of numbers when it comes to Chambal Fertilizers, and the stock is up about 3% Watch out for CESC. It comes out with its results tomorrow. There has been a high buying interest seen in the counter. It's up 3.5%. Volumes too have been on the higher end in today's day of trade. And lastly, watch out for Siemens. It saw a sharp move in the last half an hour in trade, with traders taking in fresh long positions in the stock with a high open interest build-up of more than 7% for the May futures. So watch out for them as well.
Well, we will. Thanks a lot for that. It's very interesting, actually. If we can pull up the one-week chart of Siemens for the benefit of our viewers. Remember, when the numbers came out, the stock rallied about 4% immediately post the numbers. And post that, a bit of stability in today's session too, up. So 7-day move for about 0.5%, but in today's session, another 5% after the 4% uptick that we'd seen post the numbers. So fairly interesting moves out there from this company in the capital goods space. Before we get in, Mayuresh, Joshi, just want to take that quick chart check with Brijesh on Siemens. Brijesh, is there a trade here still left, or has it done too much already?
No, Neeraj, it's still upside has been left. The stock on hourly charts, high lows formation has been there. So 1128, the stock has been quoting present rate, or any dip below 1125 can be used for accumulation purpose, with a strict stop loss of 1105. Play for the target of 1160, followed by 1180. So if it is for a BTST, then 1158 would be the target. If for a couple of days, then 1180 are the chances that the stock might try to touch that level.
Okay. Mayuresh Joshi is with us as well. Mayuresh, since we're on the topic of Siemens, good afternoon, and thanks, of course, for joining in as always. What have you made of the bullishness that the market has shown into some of these names post their numbers? The numbers are good. They were not so exceptional. Is it a case of a beaten down name doing slightly better than the street estimated?
Afternoon, Neeraj. I think the numbers, in the sense of what the expectations were getting laid out, were a tad bit better. Yes, I would agree that they were not exceptional, but again, I think they were a tad bit better. Again, the kind of order flows that have probably been reported by Siemens have been better again. So I think the environment that we are probably looking at, it was always expected that execution on their existing order book is going to be exceptional. So I think you've seen that with a lot of capital good players, where execution capabilities and the execution timelines both have resulted in a good operating performance. Now it's a known fact as well for this quarter, because of the general elections, I think the order wins will be far more muted. And then you're probably entering into the monsoon season. I think monsoons are expected to hold up as has been predicted, close to long-term averages. I think the execution there for a lot of these capital-intensive projects actually becomes a little bit on the slower side. So earnings become a little bit soft in that sense. So I think the street is or will be gestating the fact that the quarters so far have been very, very good, the past 2 quarters specifically. The next quarter, I think order flows are going to be very, very muted. And then I think the monsoon season will ensure that the numbers probably remain a little bit soft because of monsoon related issues. So I think there is every hope that capital goods as a sector, and what Siemens has probably reported, seems to be something that the street probably likes. So yes, I think selectively on certain names, I think if investors are holding on, they should continue holding on to the stocks.
Mayuresh, what's the view on Interglobe Aviation?
So the sudden feud which has come out, I think that's created a ripple effect in terms of the reaction on the stock. But I think one should largely look at the overall picture where Indigo is placed at this point of time. So for Interglobe, I think the gains that it has probably done and made, both in terms of available seat kilometers, the fleet additions, or the routes that will now be available to it, what has got vacated by Jet, will obviously get reflected in very, very strong load factors. Add to that again, if you're probably looking at how the movement of the crude has been and how the rupee has moved against the dollar, I think these 2 key variables are a huge sensitivity contributor in terms of an earnings profile. So specifically in a very strong quarter for aviation companies, and these factors probably aiding them as well, the translationary effects on the P&L should be very, very profound. And assuming the facts going forward, again, I think if international routes are opened up and multiple routes at that, again, I think the margin profile thereof improves for that airline. So yes, I think the feud aspect and anything worsening off might have a negative impact in terms of how the stock might react. But core fundamentals are pointing out and the dynamics within the industry itself, where Indigo, SpiceJet both can be huge beneficiaries in terms of the slots and what they can probably gain in terms of the market share from Jet Airways.
Okay, that's the view coming in on Interglobe Aviation, which seems to be under pressure in today's trade. Mayuresh, very quickly, your thoughts on the deal that has been announced where Tata Chemical is demerging its consumer business into Tata Global. The street seems to have given it a thumbs up. Both the stocks are trading in the positive territory. But do you think the residual business of Tata Chemical is undervalued, and hence the reason why that move that we've seen on the screen today?
So afternoon, Navneet. No, I think clearly, I think what the deal and the contours of the deal are that have been put out, I think it seems to be a win-win for both companies. For Tata Chemicals, again, I think what will probably transpire, if and when, I think all the possibilities of the approvals come through, I think it's a very, very clean deal at this point of time. So I think there is no issue or element in terms of cross holdings that probably happen. That's point one. The second element in terms of their core business itself, and the core business is expected to do reasonably well going forward. So when you're talking about either their soda ash business or the basic chemicals business, again, I think the basic chemicals business and the EBIT margins thereof, both on a standalone basis and a consolidated basis, should probably hold up, because a lot of their arrangements, specifically in terms of manufacturing of salt, for example, I think that still stays with Tata Chemical, and that still moves at an arm's length arrangement with Tata Global. The third element obviously is the other businesses as well. So when you're probably talking about the specialty product business and the expectations from from the management to scale it up from the 20% contribution of this vertical that will now stay with Tata Chemicals. And if that is as per management expectations going up to 50% over the next few years, that does improve the EBIT performance of the overall company as well as the earnings profile. Now, the kind of expectations that one has from an earnings trajectory as well, and assuming all the synergy benefits that also come through and the concentration on these businesses, I think there should be significant improvement for ROCEs for Tata Chemicals standalone business, expecting also improvement happening on an EBITDA per ton basis where Europe is disappointed, but where the diversification in terms of soda ash actually getting compensated by the sodium bicarbonate volumes. So in that sense, again, I think there is significant value left for Tata Chemical shareholders as well. And so is the value for Tata Global shareholders, because I think the synergy benefits coming in from the consumer product business of Tata Chemical and the distribution network that they've got is clearly going to aid their profile. The margin on consolidated basis improves by 125-150 bips, but that can show further improvement with the expected synergies of 100-150 crores also starting to build in, and the expectation of larger volumes actually going through, which can be a huge probability. So I think, yes, it's a win-win for both shareholders. Clear disclaimer, we own both the stock and our funds.
Okay. Still, Manish, much more to talk about, but time to take a check of what dealing rooms are recommending. Yatin Mota is here with his channel checks. Yatin, good afternoon.
Good afternoon, Neeraj. Bajaj Finance, that stock is in focus. Stock is at the day's high. Dealers, are recommending BTSC strategy based on F&O trends. Remember, the last 3-4 trading sessions, the stock has been outperforming the markets, and these are the results that the markets were watching out for. Post a 40% kind of a growth rate on AUM, dealers are confident that from here on also there could be trading upsides. Siemens, they will hold a analyst meet today. More importantly, we have been talking about this for the last 1 or 2 days as to how really the order inflow was at a 6-year high as far as the fourth quarter or the Q2 for Siemens, since it's a calendar year ended financial practice. That is also one stock which is doing well in trade, almost 5% up for that one. And Adani Ports, this is one stock wherein dealers after the recent correction are expecting some bounce back from current levels, almost 2.5% up for that one. Dealers expect some further upside to continue as far as this stock is concerned from the trading side.
Watch out for that. Okay, some more expected upside out here in Adani Ports. Yatin, thanks so much for putting that into perspective. Brijesh, how do the charts look? Adani Ports, it's come into the top losers and gainers list a couple of times now in the last 3-4 days.
See, if I look at a very short-term time frame of the chart, the oscillator as well as the price charts are showing a hidden divergence. No doubt the volume has been increased, so the volatility would be on the higher side. If I say like some downside would be 350, 355, followed by on a higher side it has been 380, 385. See, the band is it's very hard to catch this type of trade. So right now at 370, I would be avoiding, excuse me, for a buying side. But anyhow, if it trades somewhere around 360 to 362 band, then one can take a buy call on it with the stop loss of 355 and play for the target of 375 to 378 zone.
The JSW Energy numbers are out. Revenues at 1924 crores. There's a net profit versus a net loss. The stock marginally higher in trade. 3.87 crores versus a loss of 483 crores for JSW Energy, and the stock has just given a bit of a spike. Nothing too dramatic about these numbers, but stock is higher in trade. The revenue numbers also look pretty okay. So we'll monitor all of these numbers. But Bajaj Finance is a stock in focus. The stock is about 3% higher. Strong quarter, as always, I would reckon, for the company. And we're joined by Rajeev Jain, Managing Director at Bajaj Finance, on the phone line to talk about these numbers and the outlook. Rajeev, so good having you. Thanks much for joining in. Neeraj here. Good afternoon. And congratulations on a strong quarter yet again.
Thank you.
Have you done anything different, or is it a continuation of what you have been doing for the last few quarters? Because the times are slightly different than what they have been in the last 3-4 quarters.
No, it's been all continuity, both on the asset side and given since September what's been happening to the external environment, continuity on assets and continuity on liabilities.
Okay, Rajeev, just wanted to understand the mindset right now before we get to the minutiae of the quarter. I reckon that the space is wide open for stronger companies to go out and increase their market share, loan growth, almost everything, and you've done what you have been doing for the past few quarters. Are you going a bit more prudent because of the times at hand right now, or is it something else?
I mean, we remain focused on look, it's been strong growth over the last few years. Last year has been a strong year of growth. We have to just continue to manage this growth. We have never chased anything, so we're not chasing market share at this point in time again.
Okay. As I look at the numbers, Rajeev, Q4 FY19, very strong growth. I presume all the segments, consumer B2B, B2C, rural, even SME has gone up on a YOY basis in a meaningful way. How are the trends looking like, and is this something that one can expect from the company for the better part of FY20 as well, or could there be a change? Because you are known to go slow in certain segments where you believe things could change over the next couple of quarters.
Yeah, so I mean, clearly, growth was reasonably strong across most, if not all, lines of businesses in the previous quarter and full year. At this point in time, we are finding that the risk continues to represent what we would like to acquire. So we remain in a growth mode. So the orientation remains at this point in time to continue to deliver to the shareholders over a medium term a 25-27% balance sheet growth and a 23-25% net income growth within a 1.5% gross NPA corridor.
Hi Rajeev, good afternoon to you and congratulations on good set of numbers. To maintain the growth rates that you've been posting year after year, will you have to raise any capital now going into FY20?
We ended, the overall capital adequacy remains reasonably strong. We ended 31st March with 20.66% of overall capital adequacy. Tier 1 was at 16.2%. In general, we have gone out and raised in the last 8-9 years when we get closer to between 14 and 14.5. Our burn rate at this point in time is in general around between 35 to 50 basis points. There is some degree of seasonality in our growth. Our first quarter and third quarter are stronger. Second and fourth are relatively weaker. So my sense is sometime in the second half of the year, it may be the fourth quarter of the current fiscal or first quarter of next fiscal, that we would go out and raise capital from a 3-year standpoint.
Just a sense on cost of borrowing, and correct me if I'm wrong, I think for most of the players it had gone up. How did it pan out for a company like yours?
We entered the difficult liquidity environment, and post the ILFS event, we were at 8.2% blended cost of funds. We have exited, we were at 8.3% in Q3, and we are at 8.3% even today. So we've been pretty steady.
Okay, and AUM growth of 41% for FY19, what sort of guidance do you have for FY20, and where do you see the majority of the growth, incremental growth, to come by in FY20?
We essentially see growth to be reasonably broad-based. I would foresee most lines to grow between 25-27%. At this point in time, we are very comfortable from a risk standpoint on most lines of our business. So you should expect granular growth, and you should expect growth corridor despite the environment of a 25-27%.
What about the housing portfolio, Rajeev? Would that grow at a slightly higher pace because the opportunity is right there? And if that would indeed be the case, should the street factor in some pullback in net interest margins?
Given that the entity is a new entity, it's only 1 year old, we are watching our back on liquidity, given that it's a new entity and a new company while it's 100% subsidiary. So growth could be stronger given wide spaces in the mortgage market, but we are watching the liability side in BHFL before we accelerate asset side growth. So if it was not for that, I would have exactly opined that growth would be stronger in the mortgage business.
Okay.
But given the new company, given the environment, we have to be cautious.
So NIMs will not necessarily see any kind of a big impact in FY20.
We remain committed to and I'm talking only medium term. It's difficult to, it's difficult to forecast near term, I would say. We remain committed to delivering between 3.3 to 3.5% return on assets and 18 to 20% return on equity.
Okay.
How much ever harsher the environment gets.
Rajeev, just a word on your provisions, which went up, I guess, for the quarter gone by 400 crore. And a word on that, if you could elaborate on those provisions and what to expect when it comes to provisions now going ahead in FY20.
Overall, our provisions should remain within a corridor of 1.3 to 1.5% of average assets. If you see, our average assets were 100,000 crores last year, and our overall provisions came in at 1,500 crores. You should expect to see them between 1.4 to 1.6% of average assets. That's really where we have been over the last few years. So we don't see that corridor changing.
Okay.
It could go to 1.6. It may come back to 1.4. 20 basis point plus minus is really what the forecasted view would be.
Okay, Rajeev, last couple of questions from my end. One, somebody was mentioning about how FY20 could show evidence of how even if the customer growth addition numbers might be lower, the book growth would be considerably faster, 1.5 times to 2 times the customer addition pace. Is that a reasonable estimate, or are you not looking at those statistics right now as much?
No. We remain a growth company. New customer acquisition remains important for us. We last year added close to a tad below 8 million new customers. I would think we will continue to, given the geographic footprint that we continue to invest in. We are in 1,800 cities at this point, 1,830 cities in India. That will get to 2,000 to 2,050 cities in India and towns in India. You should see anywhere between 5 to 7 million customers addition in the current fiscal.
Okay, one question on the industry, Rajeev. I remember a conversation that we had about 6 to 9 months ago, wherein you mentioned that the current scenario back then was not looking like 2013. 9 months have passed since then. Has your opinion changed about how the industry and the liquidity situation is looking right now?
Yeah, it's seeming much more structural is all I would say. It's obviously not transient because the last two crises got resolved in 50-55 days. It's looking a lot more structural, and there'll be structural actions that will be required to resolve this. So one has to remain cautious.
Okay, cautiously optimistic is how I would probably sum this. Rajeev, so good of you to take the time out and speak to us. Thanks much for being with us today on Bloomberg Quint.
Thank you very much.
That's the view from Bajaj Finance, and the stock certainly doing well. The management seems confident in the need of growth. He uses the term granular every time. He always mentions about 20 to 25%, and they end up doing much better for the year at large. Let's wait and watch if FY20 is an encore of what happens. The good part is the asset quality is not dwindled.
Yeah, that's a good part. In fact, he sounded very content also with the performance. And let's see, going into FY20, what sort of performance can they show? But remember, with regard to fundraising, Rajeev highlighted that they could be looking at raising funds in the last quarter of FY20 or the first quarter of FY21. All right, just 10 minutes to go, by the way, for markets to close. So let me just quickly get in some closing strategies from Brijesh. Brijesh, any BTST or any STBT for tomorrow's trade?
I have two BTST call. One would be Ujjivan Finance. The hourly charts are indicating the uptrend. At the present of 324, one can take a buy call in it with the stop loss of 318 and look for the target of 332 to 335. And the second is all the cement counter, whether that be Ultratech, India Cement, or Ambuja. The cement packs are moving up. So in that, Indian Cement is looking good for a BTST. 95.5 or 95 rupees 40 paise the stock has been quoting. One can take a buy call with the stop loss of 94. Play for the target of 99 or even 100 can be seen in it.
Okay, by the way, the oil marketing companies have moved higher. So you've got BPCL, IOC, which are also now one of the top gainers in Nifty, and also HPCL at high point of the day, all three of them 5% for BPCL. IOC is up almost 4% in trade, and HPCL has seen gains of about 5 to 5.5%. Mayuresh, any thoughts on these oil marketing companies?
Navneet, so I think one really needs to understand that for valuing these companies from a medium to long term perspective, I think the way crude moves and with the way rupee moves against dollars, similar to aviation companies, I think these are two key variables that determine how the earnings will move on. The second element obviously is the expectations in terms of their capex that they're probably expected to do. So the capex that they're undergoing at this point of time, obviously as it starts coming through over the next few quarters or years, that is probably expected to increase the Nelson complexity, which means that the GRM should start holding up. The third is obviously the distillate plate that they've got. So I think any company with the middle distillates, I think is clearly going to benefit with IMO regulations coming through, because what you've probably seen with the new IMO regulations from 1st Jan 2020 are going to benefit companies with the middle distillates. So I think any companies with light distillates or extremely heavy crude, I think is not going to benefit that substantially in terms of reported refining margins. The fourth element obviously is the investments that they've got on their books. And the expectations largely is that with the kind of investments that they've got and the cash flows that they generate, assuming the first scenario, if the variable probably worsens off, the cash flows obviously dwindle. But again, a large element in terms of adjustment for these two variables and the inventory loss or gain either side, I think the dividend yield still remains extremely strong. So I think diversified players within this space, I think, should do well. So the diversified play that I like within the downstream companies remains an IOC from my side.
Mayuresh, we were just chatting with the management of Bajaj Finance, and the stock's up nearly 4% in trade. Good commentary coming by, good performance, highest ever quarterly profit posted by the company, and also highest ever yearly profit. Will the valuations be a concern for you, or considering the growth levels that they've been posting year after year, would you still remain positive on something like Bajaj Finance?
That's a classical conundrum, Navneet. Valuations on one side and the kind of growth that they deliver. And absolutely agree with what Neeraj had to say. They, I think, give a guidance of around 20-25% and deliver growth in excess of 35-40%. And that is consistently on the base that they've probably created. Now, the management still sounded gung-ho. I think 8 million clients had it last year. On that base, on a conservative or a base case scenario, if you're adding 6 million clients, I think that's a huge number that you're probably talking about. And my rough estimates or guesstimates might be that they might be able to do what they've clocked this time around as well for the next fiscal. The other element in terms of the innovations that they're probably doing, both on the digitalization side and the technology side, I think there is certain elements which will also increase the kind of wallet share from existing customers as well. Add to that what you're probably looking at in terms of their borrowing mix. I think the borrowing mix itself ensures that the asset liability mismatch that a lot of NBFCs are facing, this company does not have to tender or counter with that aspect as well. The fourth element obviously is the asset quality, and with tight control over that, I think asset quality pressures have remained extremely subdued for this company. So I think all the parameters is somewhere where all the check boxes are ticked. They'll be able to do a phenomenal job in my opinion next year as well. Valuations, Navneet, have always remained a concern on a price to book matter, and they always will be. So I think the consensus call here is, or at least from my side, that investors holding on should continue holding, because I think this is one quality NBFC which will keep on delivering even over the next few quarters.
Okay. Mayuresh, we'll leave it at that. Thanks much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time.
Thank you so much.
Brijesh, just before we wrap up the markets, very quickly, 30-second view. Z Entertainment, 8% higher.
As the volatility has been there in this counter of Z, but I would be suggesting if someone is looking for a buying, then keep a strict stop loss of 332. Look for the target of 365 to 368 zone.
Okay, Brijesh, stay on. We'll take in closing thoughts, but here's how the markets are ending, and a complete turnaround from what happened in trade yesterday. And it's just amazing how these markets are testing the abilities of investors, or traders rather, to maintain those stop losses, because I'm sure they're getting hit almost every single day. 1% higher, the benchmark indices, the mid caps and the small caps. The advanced decline ratio wasn't the most positive at the start of the session, but I'm guessing it would have improved because the small cap index is now up 0.6%. It's been a remarkable pullback second half of trade. Quickly show you what's happening on the index, and then we'll talk about the mid caps and the small caps. Z Entertainment up 8%. BPCL, big 4% up move, as also for Ultratech. the start of the afternoon, at least Bajaj Finance post results, another 4% up move after the 4% up move yesterday. Some gains for Adani Port, some gains for Tata Motors. Bajaj Finserv ahead of the numbers 2.5% as well. It'll derive some value from Bajaj Finance, by the way. Yes Bank correcting another 3.5%, Bharti another 2%, and somewhere down there ITC is down marginally in trade. Maruti too having some bit of pressure, but the mid caps and the small caps have behaved slightly indifferently, just that the market breadth has converged, which is actually a good sign, almost 1:1, as it show in the stock price movements, Navneet.
That's right, Neeraj. In fact, if you look at the broader markets, as Neeraj highlighted, it was just about even Steven towards the end. But in terms of individual movers, on top of the list is Tata Global Beverages and Tata Chemical, both the stocks moving higher on news of Tata Chemical demerging its consumer business with Tata Global Beverages. And Street seems to be enthused, giving thumbs up to both these counters. But also remember, they were underperformers in the last 1 month. Zuari Agrochemical from the small cap space was up and about. In fact, that counter is closing at the high point of the day with gains of nearly 17%, and Siemens is the other one which shot up in the second half of the session. Remember, the numbers came by a few days back. Good set of numbers seen from this capital goods player. 5.5% higher for Siemens. India Bulls Real Estate, another beaten down counter, saw some rebound in today's trade, closing at the high point, 11% higher. Steel Authority was the other one which saw some buying emerging in today's session, 3.5% higher for this one too. And the oil marketing companies rose in last half an hour of trade, and HPCL was one of them, which is closing at high point of the day with gains of about 6%. Well, on the losing side, Interglobe Aviation was in focus after there is some dispute which has been reported between the two co-founders. 8.5%, some fresh shorting also seen on the future side. Zealand was the other stock which saw some selling pressure in today's trade, 6.5% lower, closing around the level of 22. Petronet LNG was the other stock which came out with the numbers, not good set of numbers. There was a degrowth seen on top line, bottom line, and the margins also contracted, and there was some shorting on the future side, so 4% lower for Petronet LNG. The entire pharma space, by the way, was in focus. At least in the first half, there was a sell-off seen, but then there was recovery also seen for majority of the stock. But something like Wockhardt, that continued to be under pressure. Wockhardt finally closing the day with cuts of about 4%, and RBL Bank in the second half came under pressure. That stock's closing with cuts of about closer to 3%. And also from the banking space, we had Central Bank where the stock touched 52-week low in today's session. That's closing around the levels of 26 with cuts of 6%. Well, net markets definitely went up in trade, but how much was it a function of the options expiry day? We'll get to know that tomorrow, Neeraj, on Friday, where there is fresh buying, whether that can emerge where we left today.
Well, let's wait and watch if that happens. Just bring up the internals of the trade today. Remember, we just mentioned, but just pull up the advance decline ratio for the benefit of viewers to just show how the trends converge at close, almost 1:1. So it turned out to be a pretty remarkable afternoon for the broader markets as well, not just for the large caps. But the turnover, Navneet, would be very, very important.
Yeah, and I think
expiry day today.
Yeah, it is on the higher side, as expected, closer to 20 lakh crore for the NSE F&O side, and the NSE cash is maintained. I think on daily basis we see that figure of 30,000 to 31,000 crore.
Yeah, I thought it would have inched up a bit. We were 20,000 crores at the start of the show.
Yeah.
But not quite. And the contributors should just very quickly come up on your screen. Well, surprise, Infosys. I didn't see it in the top list, but the weightage, I guess, playing in, and Reliance margining there. No Bajaj Finance there, no Z Entertainment. So those lighter weighted stocks not quite finding a mention there.
Yeah, I think Infy rose in the second half of the session, was up 2%, but no major losses seen. But still, ITC being the heavyweight, it just dragged the index lower by 5 points. IndusInd Bank was weak in trade alongside Yes Bank, which was, by the way, the top loser in Nifty for today's session.
Quite an interesting afternoon of trade, I must say. Let's wait and watch what happens. Brijesh, is it even possible to predict what will happen tomorrow? I mean, almost every single day, the market is doing a mirror image of what it did the previous day.
It is very difficult for the month of May to predict. You know, one day it has been 100 point up, or say in an intraday, and another day it has been 100 point down. But overall, right now, what I've been looking is that the 11,100 is being maintained, and it has not been broken. Whereas the 11,300 11,320 followed by 11,420 would be the resistance zone to watch very keenly. If anyhow if we are trading in this range also or consolidating in this range, then it would be good for the bull to pull up back Nifty to the level of 11,600. But looking right now, 11,255 or say 11,260 again for a very short range would be intact. That would be 11,100 or say 11,120 on a downside, followed by 11,320 on the higher side. Anything above 11,320, 100-point upside can be seen on a Nifty.
Okay, we'll leave it at that. Brijesh, thanks so much for joining in today and giving us that perspective. And with that, it's a wrap on this edition of Countdown. From Navneet and me and the team that put this show together, thanks so much for watching.